5 ways rich people make money with inflation. As the banking system got back on its feet after the Great Recession, inflation stayed low. For many years, inflation never went higher than 2%. But inflation has been on the rise again in recent months. Is there a way to make money off of the inflation that is happening now? Yes, that is the clear answer. So, let's look at some of the many ways the rich are making money off of this inflation. In today's videos, we are going to talk about 5 ways rich people make money with inflation. So let's get into it. Number 1. Hold real assets. Most people don't realize that money is just like any other good on the market, and that its price is affected by things like supply and demand. Imagine a hypothetical situation with 10 houses on one side and $10 spread out across the whole economy on the other. In this made-up scenario, a single house will cost $1. But if we invest an extra $10 in this market, we'll have a total of $20, but there will still be 10 houses. This will raise the value of each house to the point where it will cost $2 to buy one. That is a clear explanation of what inflation is. Last year, when the economy was about to fall apart, the Federal Reserve decided to pump billions of dollars into the system by giving out stimulus checks and buying corporate bonds. This kept a depression from happening. 22% of all US dollars in circulation in the year 2020 were printed. Anyone who knows a little bit about economics knows that inflation is on the way. That's why, when interest rates were at their lowest, everyone could afford to put their money into real estate instead of keeping it in the bank. It doesn't matter if the real rate of inflation is 2% to 4% or 3% to 4%. Because, according to some estimates, the prices of homes went up by 15% to 20%. This shows that people who invested in real estate not only beat inflation, but also made a lot of money. But the smartest investors didn't just buy homes, they also got mortgages. This is because using leverage makes good deals even better, especially when interest rates were at all-time lows. Number 2. Debt. Many of you might think that debt is bad, but it can be helpful, especially when inflation is high. If $1 today is worth more than $1 tomorrow, if I borrowed $1 today and gave it back tomorrow, I would have made money. The median price of a home today is about $350,000. 20 years ago, it was less than half that, at about $150,000. Since the dollar's real value goes down every year, a $150K worth $350K now is the same as a $150K 20 years ago. So, when the Fed started buying corporate bonds and lowering interest rates, guess who started borrowing all that money? Even though they don't need the money, Amazon, Facebook, Microsoft, Apple, and other big companies around the world. Apple has more than $200 billion in cash in the bank. But it still borrowed money because why spend your own money when you can put it in the S&P 500 and get at least a 10% return while only paying 1% to borrow money? Even if you invest that borrowed money in your business and get a 5% return on it, you are still making a 4% profit. Also, all of these tax benefits come to you when you borrow money. Because of this, you'll save money on your taxes. If interest rates are lower than inflation, you could make money on any money you borrow. Number 3. Gold. What distinguishes gold from other assets is that it has always been an asset that has preserved wealth, particularly during times of crisis. In this case, it works. When the future seems hard to predict, gold prices go up. Because of the 2008 financial crisis, the price of gold went from about $600 to over $1,000 in 2007. Investors were scared, so they bought gold right away. Gold will always be worth something, even if the US dollar loses value and becomes worthless in the future. Gold has always been worth the same amount, even though the value of the US dollar has dropped by almost 90% in the last 100 years. In 2010, investors got scared again and started buying a lot of gold. This drove the price of gold to a new high of $1,900 per ounce. After that, the economy got back on track and the gold bubble burst. When the economy seems to be getting better, investors are more likely to put their money into stocks instead of gold. Because of this, gold prices tend to go down during steady, predictable times. When the US started a trade war with China in 2019, gold prices started going up again. and the pandemic made things worse. Gold prices went over $2,000 per ounce for the first time. Throughout history, gold has always been a great way to make money off of inflation. In 1973, $1 was a lot of money, but today it won't even buy you a candy bar. On the other hand, the price of gold has gone from about $100 in 1973 to $1,800 today. I am not a big fan of gold though, because it is a passive asset. It just sits there and shines, while stocks or real estate can bring in rental income. It's a thing that you can use to get a service or product. Why do stocks keep going up? Because the companies that keep them going keep growing. 10 years ago, Apple sold a lot fewer iPhones than it does now. Because of this, its value is much higher now than it was 10 years ago. Number 4. Crypto. Even though the technology behind it is impressive and has a lot of potential, it is still very dangerous and hard to predict in the short term because it is so new. As we've already said, one reason Bitcoin has gone up so much in the last year is that the Federal Reserve started making trillions of dollars. After buying stocks and houses, investors realized that Bitcoin is like digital gold, so they also bought Bitcoin. Many people who didn't care about Bitcoin before the craze have forgotten that it used to cost around $8,000. Before the trade war, the price of a Bitcoin was only $3,600. If you were interested in Bitcoin when most people weren't, you might have made a lot of money. But people tend to get excited about anything when it's all over the news. On the other hand, the smartest people got in early and have made 10 to 20 times as much money since then. Number 5. Stocks. Even though stock prices haven't gone up by tens of thousands of percent like crypto, they are much safer and more stable. From July 2020 to July 2021, the S&P 500 went up by 40%. That's an amazing return, especially when you consider that you're investing in the whole US economy. When you buy a stock, you buy a part of a business. That's why sometimes they're called shares. When there is too much cash in the economy, the value of a company goes up, and so does yours. Also, that money is often spent on needs and wants, which helps your business grow faster. So you're not just fighting inflation, you're also getting something out of it. Think for a second about how much of those stimulus checks were spent on things from Amazon or Apple. When you add in the fact that these businesses have borrowed billions of dollars for almost no money and grown at an exponential rate, the situation looks even worse. People are going back to work, the economy is getting better, people are spending more money, and these businesses are ready to grow even faster. Since inflation happens whether we like it or not, think of it as a chance to look at your whole portfolio. Even though inflation has been rising in recent months, interest rates were still near record lows in August 2021. One of the best ways to fight inflation is to always make sure your investments are well diversified and full. Long-term, money invested in stocks tends to grow faster than inflation. Positions in real estate, commodities, tips, or bonds, on the other hand, can only offer more protection by being spread out in different ways. Cash that is just sitting around will always lose value, but long-term bonds will be affected if interest rates start to go up. And that concludes our review of 5 ways rich people make money with inflation. We would like to know what you think by dropping a comment. Did we omit any brand or model you think should be a worthy mention? Kindly let us know. Thanks for watching the video, and please don't forget to like and share the video. You can also subscribe to get notifications for more videos like this. Until our next video, take care.